Hey, this is Big G or Gene or Gino or Dad or however you know me. And here we are at lesson 24. This is about creating a trading journal. And you can see here on the screen, um, I have a sample journal for you. It's just a simple grid that I created. And if you want this file, I can email it to you. Just let me know. But anyway, this is just something you need to keep a record of your trades. Um, and so obviously it's good to keep a record of what you're doing and looking at your, what you're profiting or losing or whatever and percentages and all that good stuff. I'll go over this in a little more detail in a second. But truthfully, for me, the biggest part of keeping a trade, or most important part of keeping a trading journal, is this notes section over here, where I can make myself notes and I'll write down, why I got into a trade, what the trigger was, the candlestick pattern, or what have you. And then I'll also sometimes make notes, whether it was a good trade or a bad trade, or maybe I should say a dumb trade, or even a stupid trade. Even just a few weeks ago, I just made a stupid trade. I was overconfident, cocky, risked too much, and lost a lot. And I didn't even bother putting the details down in the notes on that trade. I just wrote in big letters "stupid" in the notes, and that was enough. But anyway, and I do keep this by hand. Actually, I just print this out as a blank grid. I just like doing it by hand. I have a three-ring binder. I just print these out and stick them in a three-ring notebook. And so I write these out by hand, but obviously for this lesson, I typed in some information just for us to look at. So let's just kind of look at each column. And this is not a real trade that I made. This is all fictional. I did look at the chart to kind of make it look like it would be a realistic trade, as far as the dates and the price and all that. But this is not a trade that I made. I just made this up just to for this lesson. So several things you want to do. Obviously, you're going to write down the symbol, the company or the stock you're going to buy, which in this case is Apple. And then you're going to write down the number of shares that you purchased. You're going to write down the entry date, and you're going to write down the entry price. And then you want to write down your stop price. This is for a couple of reasons. One, to be sure that you have a stop price in place, that before you get into a trade, you know how much you're going to risk and you know where your stop is. And so in this case, you're risking $2.50. You're going to get in at 187.50. You're going to get out at 185. You're risking $2.50, and so you're not risking a whole lot of money on this trade. Your total, if you buy 25 shares at 187.50, your total investment in this case would be $4,687.50. And so that will be the first part of your entry right there as you get into the trade. And then later, in this case, on June the 4th, you exited the Apple trade. You exited at this price, 192.50. This is a maybe I was just kind of looking at the Apple chart here, and supposing you got in here when it broke out above resistance, and you got out up here when it broke out again at 192.50. Again, this is a fictional trade, but if you got in or you got out at 192.50, your total return would be $4,812.50. That's 25 shares times 192.50 is $4,812.50. Your total G and L means gain or loss. So your total gain in this case is $125. 48.12.50 minus 46.87.50 is $125, and that's a 2.7% gain in just a week or so. And I just put on the notes here, this would have been a breakout above resistance. You may want to write a bullish engulfing pattern, hammer candle, breakout above resistance, like in this case, pivot point, 920 crossover, all the different strategies that I've gone over in these previous lessons, as well as others you may learn in the future. You write down why you got into the trade, and even maybe more detail on why you got out of the trade, or something went wrong or something went good. Just this is the section here where you're going to learn. And the biggest reason to keep this journal is to learn. And you can go back and you can see previous trades. You can see, did you risk too much? Did you not risk enough? All the different things you can learn from this. Obviously, keep up with your win rate and how much money you're making. That's an obvious reason why you keep it. But this is really just a journal for you to continue learning how to trade and using that experience, using every trade that you make as a learning experience, whether it's a good experience or a bad experience, profitable or not profitable. This is a way to keep up with your journal, and you can see your tendencies. You can see what's working for you and what's not working for you. So a lot of good reasons to keep a journal, and hope this helps. And we'll see you next time at Lesson 25.